Hello, everyone. Good day, colleagues. Good day, forex traders. Wherever you are in this part of the world, I hope you are okay. If you're watching this video, then we thank God for your life, and then it means you're still keeping the protocols of the pandemic. You're still observing everything that we've been told. Irrespective of you believe in it or you don't, but as long as watching these videos, so I'm glad we still have one soul on earth. All right, I'm not here to talk about the pandemic. I'm here to talk about trading, forex trading. Okay. My name is Njabulo. I'm from South Africa. So I trade only V75. All the videos that you saw previously about Nasdaq and US 30 or gold, those were just for education purposes. Hence, I didn't dive deep into them, and some of them I did dive deep into them because I was then trading those things. But recently, indices has been so weird, so now I'm trading V75 only, and I'm not here to advise on what lot size to use or what you should do with your money whenever you make a profit, because I'm not a financial advisor. I'm just here to share with you the information that I have about market structure. And if ever you use this information, then you profit, then I'm happy for you. And if you use this information and you don't profit, please don't blame me. This is only to share information. So some have other confirmations, and some don't have confirmations. They only you use one strategy. So I'll advise you to use what you see now here. Don't mix it with anything that you might have seen in my previous video. If you want to use the information from the previous video, please only use it. And in this video, please only use it. Don't mix it with anything. Okay. With that said, let's get into it. I want to talk to you today about market structure. Okay. We There's something on market structure uh, that is called failed market structure. Okay, failed market structure, FMS, and some call it swing market structure, SMS. So for the purposes of this video, I prefers to use this word here, failed market structure, not swing market structure. We will use failed market structure rather than swing market structure. Okay, so what is the failed market structure, and how do we know that this is a failed market structure, and how sure are we again that this is a failed market structure? Okay, let's start here. I usually start my setups on a higher time frame. Those who I trade with knows that most of the time I recommend daily time frame. Okay, but if there's nothing clear, I can go to a weekly or even monthly, so that I'll get the bias of the trend. Let's say then now we have this move. Okay, we will start our examples on a uptrend first. Okay, let's say this is an uptrend. We have this move up, and then price came down, and then it move up again, then came down, and then move up again. This is one of the things that we all know. We've been told that the expansion and whatever, all those terms. Okay, so here we are talking about the failed market structure. Remember, I said this is an upturn. Okay, so prices going up. All right. So what do we see here? We see a low here. We see a high, and then we see another low here, and then we have a higher high here. Okay, so we will change that. We'll start to we will start to focus from from this one here, we have a high, then we have a low, and then we have a higher high here, higher high, and then what then do we have here? Here we have a low. Okay, here we have a low, we do not have a higher low, we do not have a lower high, because until higher high is broken or the lower low is broken, so we can change this to lower high or a higher low. Then where's the swing market structure here? As you can clearly see, there's a break of market structure here. So this break of market structure, it confirms to us that this is a higher high, and this is a low here, not a lower low. So also this is the swing market structure here. This is a failed market structure. Oh, sorry, did I just say swing? Sorry about that. This is a failed market structure. But still, there's something I want to show you. If ever we have this price coming up to here and not all the way here, is this a failure market structure? No, this will not be a failure market structure because the previous high is not taken out. We confirm that this is a failed market structure simply because it failed to take out the previous low but took out this previous high. It failed to take out this previous low but took out the previous high. Therefore, this is a failed market structure. And then in most instances, whenever we see this, we usually have an order block somewhere down here. We usually have a bullish order block because this is an uptrend. So what then to expect? We then expect price to come down and mitigate this order block and then shoot back up. All right, and then yeah, we expect price to come here to respect or mitigate or trade into this order block and goes up, and then this will be your take profit one here. Why this will be your take profit one? Because there's liquidity above here where the price moved down. Okay, so but what then happens should price go down and break this bullish order block and then go down? This is what then you should do. Immediately look for an order block somewhere here, because price will always come and respect an order block. I do not care if ever that order block was left for an hour ago or 2 hours ago or 3 hours ago or 1 week or 1 month or even the previous year. Price will always come and respect that order block, because the big boys in the market, all of us, all as long as you are not trading for the bank or the bonds and all those, you are just a retail trader. I am a retail trader, I admit that, but I do not use the method of retail traders of buy high, sell low, double top is a sell, and double bottom is a buy. No, I do not use that, but the fact is we are all retail traders. Okay, let me not confuse you about that dip, about that much. Let's come back here. So this here is a swing market structure only if the previous high is taken and it failed to take out the previous low. Therefore, this is swing market structure. Therefore, mark this order block here, because price 90% is likely to come and respect this here. 90% this is likely to happen. So so for the downtrend is the opposite of all this. Okay, so for the downtrend it's an opposite of all this. Okay, so for the downtrend, this is what happens. This is what happens here, and then boom, yeah, like this. Okay, we have a high here, and then we have a low, and then we have a high again, and then we have a lower low here. Why lower low? Simply because of the break of market structure here. Okay, so this is a lower low simply because of the break of market structure. So this now this here, this will be our failed market structure right here. Then this should be just a normal high, not a high low, not a lower high. Okay, so this will be our failed market structure. Why? Simply because it failed it failed to take out this previous high, but it successfully took out this previous low. All right, this will be our failed market structure simply because it failed to take out this previous high here, but it took out what the previous low here. So this our swing market, this our failed market structure. I keep on saying swing market structure. Therefore, this our failed market structure. So if things are like this, or what then do we usually have an order block somewhere here? So we expect price to come up and then mitigate this order block, and then goes down. Then this will be your take profit one here. This will be your take profit one. But then what happens again? The same thing as a downtrend. If price goes up and peers or trade or goes above this order block, instead of this being a mitigation block, this will be a breaker block. Instead of selling, we expect price to come down to the very same order block instead of selling previously, and then we'll do what? And then we'll buy. And so what will be our take profit? Our take profit will be this previous high. Yeah. In fact, yes, yes, this will be our take profit, because when price goes up, you immediately, same as an uptrend, you have to look for an order block somewhere here, so price will come and respect it, come down, and then this the liquidity above this order block will be our take profit one. So I do not want to say how you should trade it. I do not want to say go big or go home, or I do not want to say use the 0.01, the lot size or the biggest size, but it's up to you. So this will be our take profit one. Definitely show price once it goes above this order block, this order block here. Only if you marked the correct order block. If you want to know about the order block, I made some videos about order block. You can go and refer to it. You should know by now what's an order block, which what characteristics of order block. Okay, so this is a failed market structure, and this is always what's happening in each and everything that you can come across in trading. I do not care if ever it's a currency pair or index or index. Okay, so this is what always happen. So let's look at the examples on this chart here. So as we can see here, we have V75 on daily time frame. As I always say, as I said previously, that I trade only V75 because of the weird moves on USD, Nasdaq, and gold. So now I trade only this. And please note that all the videos that you'll see from me, it will be all about V75. Okay, so we are on a daily time frame now. What do we see? We have a high, we have a low, we have a higher high, and then we have a low here. Okay, we have a low here, and then the reason why we have a higher high here is simply because we have the break of market structure here. These are the basics, but for those who do not understand why we have a higher high and then a low, not a lower low here, it's simply because of the break of market structure here. So now the interesting part is this one here. This is not a high low, this is not a lower high, simply because we do not yet have a lower low that has been taken out, and and again it's just a low, it is not a lower high, because this move did not take the higher high. Therefore this is not a lower high, because this move here did not take out the higher high. Therefore this is not a lower, this is just a low only. Okay, so is this a failed market structure? Let me just pause a little bit so you answer yourself, just for 5 seconds. Okay, my 5 seconds, 5 seconds lapsed, so I hope you have an answer now. This is not a failed market structure. This is not a failed market structure. Why? Because we do not we do not have a low that has been taken by this move only. We do not have a low that has been taken by this move, and do not have a high that has been taken by the move after the price rejected here. Okay, so what then happens? We see price coming up here to form another high, not a high low again, or a lower high. And then after that, what do we see? We see price coming down to take out this low here. Okay, and then forming a lower low again, taking out this low here. And then it forms what? It formed a lower low down here. So we said it is a failed market structure because it failed to take out the it failed to take out the previous high, but it took out the previous low. Okay, therefore we can confirm that this here, it is a failed market structure. This one here, this is a failed market structure, simply because price failed to take out the previous high, but it took out what? The previous low. And then where's that low? It's here. We have a low, and then we have a higher high here. Then this high is not above the higher high, um, but then we have a lower low that is obviously below the low, hence it's called the lower low. Therefore this here is a failed market structure. What then do? We always have to look for an order block. So I cannot explain what is an order block is in this instance. I'll just highlight it here. Okay, so we expect price to come up and respect this order block and then shoot down again, or expect price to pierce, trade above this order block, then come back after it broke it, and then trade up again. Okay, so but in the meantime, what then do we do? Because we have this high again here. Is this a failed market structure? The answer is no. Why? Number one, this high failed to take out this high here, and then we have a 50% that says this is a failed market structure. Why? Because this high failed to take out this previous high here. So 50%, yes, this might be not this is not this is this might be a failed market structure. But in the meantime, this previous low is not yet taken out by this move, by the move from this high here. Therefore, this is not a failed market structure. Okay, until we see price going down to violate this low, then this will be the failed market structure. Or we see price going up to take out this previous high. Therefore, what are going to have? We're going to have the failed market structure for a bullish move, because this low failed to take out this previous low, but it took out the previous high. So what then to expect in this order block here? We expect price to come and respect this order block and then shoot back up again. So this is all that there is about the failed market structures. So I do not have to go deep on lower time frames, but for the sake of education purposes, I think I will. Okay, so we are on a daily time frame. We have a clear market structure here. Okay, so whenever we go down to H12, which is a 12-hour time frame, is the same thing as on the daily time frame. As that now we have a little bit of expansion like here. Okay, we have a big V, and then on a daily time frame we have a smaller V. Okay, so when we go down to our confirmation time frame, we use H4 as a confirmation time frame in my group. uh, on H4 we can see that there's a shift of movement here. Okay, there's a shift of market structure. On H4 we have more of a bearish move than bullish move. Okay, on H4 we have more of a bearish move than bullish move. But do we have to look for sell opportunities, or do we have to look for buy opportunities? To confirm that, let's go to daily time frame again. I hope you are following me, guys, and I hope I'm not confusing you. I said for us to confirm that from here, do we have to sell or we have to buy? We still have to wait for or price to break this previous high, or price to break this previous low. And then what then do we do if things are like this? We wait. What did I just say? I said we wait. This is a daily time frame, and this might happen somewhere around in late October or early November, if it's going up or if it's going down the same days. But do we have to wait for that long to take a trade? Remember, we are on a downtrend until this previous high is taken, so we can then change to be bullish. But for now we are still bearish. Okay, so let's go down now to H4, our confirmation time frame. All right, we use H4 as confirmation time frame in my group, as I said before. Okay, so again, let me zoom out once so that we have a clear picture. Okay, so it's the same thing that we have here. We still expect price to come up and take out this previous high, or go down and take out this previous low here. Okay, so now if things are like this, what what then do we do? Let's zoom in once. Remember, we are on a bearish move from the daily time frame. We are on a bearish move on a daily time frame, so we have to do what? We have to look for sell opportunities. And then where do we look for sell opportunities? Now we'll quickly come down here. Where's the thing? Okay, it's here. We can simply spot this, okay, low here. This is a new structure. Okay, we can spot this low here, and then we can see this high here. Okay, let's move it to here, and then again we have this lower low here. and then we have this lower low here, and then we see the break of market structure right here. And then what then do we have? Again, I said I'll not explain why pick this candle as an order block. We all know what an order block is by now. So this is an order block here. So what then do you expect? We expect price to come up, mitigate this order block, and then go down. Then this will be our take profit one here. This price will be our take profit one. Yeah. All right. Only if this order block is respected. Okay. Only if this order block is respected. And then again, why do I give you this as a point of interest or area of interest? It's simply because again on a bigger scale, okay, we have a low here, we have a low here, and then we have another high here, okay, and then we have a lower low here. Okay, no, I didn't want to use this one. I wanted to use this one here. Yeah, and then we have another low here. So before price came down here, it formed this high here. Okay, price formed this high here. Okay, let's put this low here. Let's delete this one. Yeah, we have a low, we have a wait. Did I just say low? We have a high, we have a low, and then we have a high, and then we have a lower low here. Okay, so this high failed to take out this previous high, but took out what this previous low, and then it formed the lower low. Therefore, this is a swing market structure. It's confirmed. This is a swing market structure simply because it failed to take out the previous high, but took out the previous low to form a lower low, and therefore at the failed market structure here, we have our bearish order block, of which we have to wait for the risk-free entry. By that, I think you know what that is. We have a risk entry, and then we have a risk-free entry, and then let's wait for our risk-free entry, and then this is our point of interest on H4, and then when we go down to to M15, our entry time frame. Let's zoom in and see what's happening here on our point of interest. This is our point of interest right here. This is our point of interest, and then we have this here. By now, I think you see it before I even label it to you. We have a high, we have a low, then we have a high, and then again we have a lower low right here. This high failed to check out the previous high, but it took out the previous low, and then it formed a lower low. Therefore, what we have, this is failure market structure, and then this order block here, we expect price to come and respect it, and then goes down again. So that's all that there is about failed market structure. And then use this with price action. Don't go against the trend, go with the trend. Do not go against the trend. I repeat, just go with the trend, and then you will see how much you'll collect the pips, and then you'll see how much you'll make money if ever you do not go against the trend. Always go with the trend. So yeah, that's all that there is, guys, about fail market structure. For any questions or any comment or complaints for that matter, because you cannot only be appreciated by everyone. You are not money that will be liked by everyone. Feel free to say whatever you like. I will accept everything in the comment section below. Cheers.